What's happening, my traders? It's JD Trades, and I'm bringing you this week's Trade of the Week's breakdown. So far, it is a Tuesday. We've had an amazing trade yesterday on Monday on gold, and I'm going to spend some time to talk to you about why adapting to the live market is one of the most key skills you are going to need as a trader. As always, guys, don't forget to leave a like, comment, and subscribe, and turn on that post notification to get notified whenever I post a new video. Additionally, I do post a lot of chart analysis, updates on my current trades, trade ideas, and many more inside of my Telegram. The link to my Telegram is in the description box down below. So let's just get straight into it. Right. So right now we are currently sitting Monday. It's London session has opened, and in terms of what we've seen from price from gold, is we've been bullish for quite some time. Okay. Now the week prior on Thursday the 11th, we had a very strong move to the upside. We had a pullback. Okay. This move to the upside was, I believe, CPI data that came out, right? And now we've had that pullback. Okay, so that pullback, of course, worked inside this 1 hour imbalance, and I could see that gold has a higher potential to head higher. There was a higher probability of gold heading higher. We had this New York candle here, this 1 hour candle here, which okay, and could have been the area where prices should move higher from. Okay, however, there's more imbalances and more areas to the downside. So if we turn our attention to the 8 hour, okay, the 8 hour, we had this very nice 8 hour candle here, which, if you guys did watch my pre-analysis, okay, so the video that I posted on Sunday this week, I talked to you guys about how this 8 hour area is a pretty nice area to look for gold longs to then take out all-time highs. All right. Now, as I said before, it's about adapting to live market conditions. Now, as price continued, okay, we had this very nice half-hour candle, right? Now, like I said to you, if I'm looking for lower prices to the potential 8 hour area, okay, down below, we need to look for, an excuse. We need to look for a potential entry to get that move to the downside. Now, we had this area marked out and we were monitoring this area for a potential trade out of this half hour candle to then head down lower to the 80, sorry, to the 8 hour candle that was resting down below, which is the start of this high here. Okay. Now, when we were monitoring price, or when I was monitoring price, I noticed that, okay, cool, we are heading up into the area, right? We had that first bounce here, okay? So if you are someone that is, of course, an advert or watches market structure a lot, right? We had this low here, we had price creating new high, then we had a high low. Okay, so if I'm studying from the lower time frame, I'm going to wait for a break of structure on the lower time frame, especially when it's a move that is going against the trend. Okay, well, for moves that go against the trend, I always make sure I can see a break of structure, a shift of structure on the lower time frame before I decide to enter the trade. Okay, but as we can see, price made a new high low, right? Made a new high low, made a new high, right? Right there, we shifted to the downside. Now, the interesting thing that you guys should understand and realize is that price doesn't really give you a chance to enter, right? Now, candlestick formations are very important and they can help you decide and indicate to you when it's a good time to enter the market. Okay, so we can see here, even if you played this area here, this 2 minute area here as your imbalance entry, okay, after price is taking the low, okay, so for example, such as this, okay, was price, let me get rid of this for now, was price in a rush to head down lower? Okay, we had the initial reaction. So if you did enter just off of the basis of this is a very nice area to enter a trade, you would have been able to gain around 29 pips. Okay, however, if you waited for the shift of structure for price to retest that area for you to then enter a short, right? I don't tend to enter positions straight away. I want to see consecutive candles going in the direction that I'm looking to enter that position. So if I'm looking to take a short in this scenario here, right, guys, I want to see some bearish engulfing candles. I want to see bearish candles. And when price came to the area, we saw a very strong bullish candle. It stopped, it printed bearish. We didn't get a consecutive candle, at least three consecutive candles printing bearish. It was holding true. right? When we turn our attention over to the 1 minute, okay, we can see we had a slight pullback on the 1 minute. We had a new high form. We had price test this 1 minute candle, okay, test the other end of that imbalance on the 2 minute and create a new high. Just off of that alone, the trade is no longer valid for the sell, right? So with that bearing in mind, there was no trade on this specific pair and we waited. We waited and waited to see how price was going to react. And as you can see, we did hang around inside this area a couple more times. We had a test of this 1 minute candle a few times as well. Okay, right here. We had price testing this 1 minute candle here quite a few times before it started to rally. So if you of course watching this and you start to see, okay, there's a lower probability of this actually giving you the sell, it might give you a long, then if you've noticed inside like in terms of a DXY, it's showing bearish price action, then there's a high probability of gold pushing up higher, then this is a good indication for you to go long. Just because you may have a bias for the day, just because you may have an understanding of what you would like to see, it doesn't mean you should not be flexible. Being flexible and adapting to live market conditions and as to what price is doing will help you in the long run. Okay. Now, another questions that you should have asked yourself, okay, is on the 15 minute. When we saw price reject out of the half hour candle initially, where did we head down to? We head down to this 15 minute candle here and we had a very, very nice rejection off of it. Okay, we had that pin, that bullish pin bar candle, okay, which is a sign of reversal, a sign of strength to the upside. Okay, market attempted to close all the way down, but was pushed all the way back up, okay, creating this sort of like a pin candle, right? We've had the next candle print bullish, okay, very nice full bodied candle. This is signs that hey, maybe price is not really trying to give us that entry from this area. Remember, we are going against the trend. Okay, this is a counter trend trade. So if there are too many signs that are going against that potential position, you don't need to force the trade. Cool. Now, we've seen price progress and we noticed that near New York session on Monday, we can see this candle area now turn into a potential breaker candle. Now, of course, you can play this area as a breaker candle. That's perfectly fine. However, we can also see here that we had a very nice half hour candle forming. If you turn our attention over to the 1 hour candle, you can see how nice that 1 hour candle also looks. Now, does it make more sense for us to go long? Yes, because the structure is bullish. We are seeing bullish price action. We've had a sell setup that has been invalidated. Okay, we've had a new high being created, a new intermediate high being created on the lower time frame. So these are good signs. Now, the entry that I took was off of this 1 hour candle here with our stops resting just below that area. Okay, so you would have needed around 50 pips. However, you can refine this area down. Okay, refine the area down to the half hour area and you're not going to need 50 pips. You're going to need around 40 pips. Okay, so I kept my stops around the 40 pip mark and let the trade play out. I'm going to target the most recent high as the liquidity. My main targets are usually a 1 to 2 risk to reward ratio for most of my positions, as that is what I am comfortable with. That's what fits my personality. That's what fits my parameters. Now, you might be someone that wants to trade with a 1 to 3 R&R. Okay, 1 to 3 R&R is more than possible for this potential trade. Okay, now that we've got our areas to exit the market, we have our areas to enter the market. All we do now is we wait, allow price to head into the area, and we take that long position. So in terms of this position here, right, there are evidence to show you how you could have re-entered this trade on multiple occasions. What did price do? Okay, once we pull back down into the area, we shot up, okay, showing us there is an intent to actually react from this area. Gold then came back down one more time, right, before starting to rally to the upside. Now, when you are looking at a potential trade like this, you need to understand that the market may not necessarily give you a lot of opportunities to enter the trade. Your job here is to believe in your analysis and understand, like, hey, cool, we had a look at the sell. The sell did not work. The sell was not um, a high probable sell. Okay, the setup, the requirements, the criteria was not met for that sell. So because the criteria was not met for that sell, we then need to, of course, go with the trend. Remember, going with the trend is always going to be better than you going against the trend, right? We had this push up here, taking the position off of the half-hour candle, having an adequate risk, okay, anywhere from 1 to 5%, okay. I had 2% trade on 2% risk, sorry, on this trade, and we shot up quite considerably, okay. We smashed both TP ones and twos, and then the extended TPs of 3 and 4, right? And just like that, in certain scenarios, in a lot of scenarios in the market, you need to be adaptable. Price is not always, to round things up, price is not always going to follow your daily bias. Your daily bias might not be right for that specific day. If you wanted, let's just say, gold to come down, it might not come down today. It might come down tomorrow. It might come down on Thursday, right? It doesn't mean you were entirely wrong. It just means you were wrong for that day. And that's okay. That's why when you're going against the trend, one thing that I would always recommend that you do is always wait for a shift of structure on the lower time frame before you partake in the market. Wait for those candles to close to give you confirmation of the intent to go in the direction you're looking for. If you are not waiting for those candles to close, yes, you're not going to get the tightest entry. You're not going to get the most perfect and entry and exit possible. That's okay, guys, because that way you're mitigating risk and you're decreasing the amount of times that you could be potentially wrong. Now, look, for example, let's take a look at this on the 5 minute. Okay, we have this 5 minute lower high, creating a lower low. We've had a higher high. That is a small shift, right? Even on the 1 minute time frame, we saw that all these were full closure body candles, okay. However, when you take a closer look at said area, okay, you can see the candle, this 5 minute candle, once it closed, okay, look at how strong that candle closed, okay. Most of the body of that candle was at the highs, right? It's a very strong rejection candle to the downside. You could have then entered, okay, either covered the original risk, which is down below, or cover the most recent low made and target the most recent higher high. And just like that, you've also taken part in this potential position, right? So we had that first entry down below, we had the second entry off of waiting for that shift of structure, okay, right? We also had this imbalance being created here, okay. This is more than enough, guys. This is more than enough for you to pull the trigger on this position and believe in the move. Remember, if you are going with the trend, all you need to do is make sure you have an adequate stop. As long as your stop loss is adequate, okay, this is why for gold I tend to go for 40 pips. Sometimes 40 pips is not even enough, guys, and that's just what it is, okay? Having an adequate size stop loss. I know there's a lot of things out there on the internet where you're talking about, potentially 10 pip stop losses, 5 pip stop losses, and those are fine and great. Okay, if that works for you, that's fantastic. However, you need to give the market space to breathe. You need to give price the opportunity to move, right? You don't want to get yourself wicked out of a position because you gave it too tight of a stop loss when you could have given it a little bit more breathing room in order for you to still be in the position. Does that make sense to you guys? Okay, now that's the second entry. The third entry would have come a lot higher. Okay, as you can see, we had a very nice 2 minute candle here. Now, these are what you call scalings. Okay, scaling into your position will, of course, allow you to add extra positions on top of your original position. So, for example, you could have had a 2% entry right at the low of the move. You could have added a potential zero point 0.5 entry here and another 0.5% entry here. Okay, remember the stop losses are different sizes, so your lot sizes are not going to be exactly half or exactly 25% of the original one. This way it gives you that flexibility to adapt to the live market conditions and also allow you to take more calculated risk. Okay, that's what I would call it. Take more calculated risk and really home in on your winnings. Okay, really home in on your winners. You really need to home in on your winners. Okay, so using a strategy like this is very helpful for those who are looking to do something similar to that. Now, guys, I hope you found this video helpful. Of course, you can show me this by leaving a like on the video, leaving a comment saying, hey, JD Trades, this really helps me. I appreciate this video, something like that. I'll leave a like, give you a comment as well, give you a shout out. And of course, subscribe. Guys, don't forget, all of this is posted inside of my Telegram. Link is in the description of this video. It's all down there, guys. And as always, remember the theory behind the practice. I will see you guys in the next one. Peace.